As of this moment, the live intraday price for Datavault AI Inc., trading under the ticker DVLT on the Nasdaq, is 0.75 USD, which represents a gain of 3.75% today. This upward push of 2.5 cents might seem like small change in a market where Nvidia stock or Apple stock can swing by dozens of dollars in a single session, but for a company operating in the sub-dollar territory, this movement carries significant weight. Most investors looking at this ticker see a penny stock struggling to find its footing after a volatile year. But the reality is that we are witnessing the construction of a massive decentralized data infrastructure that most people are completely missing because they are too focused on the noise. While the crowd is busy chasing the latest hype in the mainstream tech sector, Datavault AI is quietly activating physical edge networks in major metropolitan hubs like New York and Philadelphia. The general expectation for a company like Datavault is that it will simply burn through its remaining cash until it needs to dilute shareholders further or fade away into the graveyard of small-cap tech. However, the reality of their recent collaboration with IBM and the Sanctum AI platform suggests a much different trajectory. They aren't just selling a promise of software, they are deploying actual hardware nodes that handle real-time data tokenization at the source. This is a fundamental shift from the centralized cloud model we've seen dominate for the last decade. If you are using a Fidelity trading platform or checking your portfolio on the Robinhood app, you are likely used to seeing the big names dominate the conversation. But Datavault is playing a different game by trying to value data as a tradable asset class. The momentum we are seeing today follows a period of intense selling pressure. Over the last week, major shareholder Silex Holding Co. has been offloading millions of shares, which usually signals a disaster for retail investors. Yet despite those millions of shares hitting the market, the price is holding and even recovering today. This indicates a high level of institutional absorption, or perhaps a new wave of buyers who understand the significance of the Fintech TV partnership that was just announced. This partnership isn't just a media deal, it's a deployment of their patented ADIO inaudible tone technology. This allows for real-time audience engagement and bias detection in broadcasts, essentially turning a passive viewing experience into a data-generating engine that can be monetized instantly. For those of you who manage your own portfolios through an individual brokerage or use tools like Schwab Intelligent Portfolios, the volatility here can be stomach-churning. We saw the stock drop significantly yesterday despite positive news, which is a classic example of the disconnect between market sentiment and fundamental developments. The reality is that traders were likely more concerned with macroeconomic headwinds and a risk-off environment in the broader tech sector, which also impacted Tesla stock and other high-beta names. But when you look at the 148% year-over-year revenue growth reported in their last quarterly update, you start to see that the business is actually scaling. If you're doing your own self-investing through investing sites or perhaps looking for investment help on forums, it's easy to get lost in the technical indicators. But with DVLT, the story is in the licensing model. Management has raised their 2026 revenue guidance to over $200 million. To put that in perspective, the current market cap is hovering around $400 million. If they hit those numbers, we are looking at a valuation that is incredibly compressed compared to the rest of the AI sector. The expectation is that they will fail to execute on their 100-city expansion plan, but the reality is that the first 2 major cities are already live. I want to pause here for a second and get your take on the current small-cap landscape. Comment below how many shares of Datavault AI you currently hold, or if you're waiting for a specific price target before jumping in. When we talk about online investing today, we often think about the convenience of the Fidelity mobile app or the zero-commission allure of Robinhood investments, but professional-grade data management is moving toward the edge. Datavault's use of the IBM Watson X platform within a zero-trust environment is designed to solve the one problem that keeps enterprise CEOs awake at night: data security. By processing and tokenizing data at the edge, they eliminate the need to send sensitive information into the public cloud where it can be intercepted or misused. This is why their target audience isn't just the retail trader on SoFi Investing, but the massive insurance and financial institutions in the Northeast Corridor that handle trillions of dollars in assets. Looking at the institutional activity, we see names like Vanguard and JP Morgan starting to take small positions. While institutional ownership is still low at less than 1%, the recent entries suggest that the smart money is starting to pay attention to the patent portfolio. Datavault holds significant intellectual property in acoustic science and data valuation. This isn't just about AI, it's about creating a verifiable digital twin for every piece of data an organization produces. Whether it's genomic data from their Silex partnership or media analytics for a global broadcaster, the goal is to make data tradable almost the instant it is created. If you are currently exploring online investment options through a SoFi active investing account or Interactive Brokers trading, you know that the small-cap AI space is a minefield. Many companies have the word AI in their name, but no actual revenue or proprietary tech. But Datavault is showing a path to monetization that doesn't rely on selling ads or consumer subscriptions. Instead, they are positioning themselves as the infrastructure layer for the next version of the web. Their information data exchange is the platform that allows companies to license their data safely. The business model itself is shifting toward a high-margin licensing structure. In past years, the company struggled with high operational expenses and a focus on traditional wireless audio products under the WISA brand. While that legacy business still exists and provides some cash flow, the real growth is in the data science division. They are moving away from being a hardware company and toward being a high-volume licensing firm. This is why the 2027 revenue targets are being set as high as $2 to $3 billion. The expectation from the market is total skepticism. After all, these are massive numbers for a company that was doing less than $5 million a year recently. But the reality is that if their 100-city rollout succeeds, the scale of data passing through their nodes could easily justify those projections. It is worth noting the risks, however. Dilution has been a major concern for investors using the Robinhood trading app or Fidelity brokerage. With a share count that has climbed significantly, the per-share value is being tested. Furthermore, the reliance on strategic partnerships with larger entities like IBM means they are subject to the timelines and priorities of their partners. If the rollout of the Sanctum AI platform slows down, Datavault's revenue recognition will also lag. For those doing their own online investing through SoFi Active Investing account or Interactive Brokers trading, it's crucial to monitor the SEC filings for any further insider selling, especially from Silex, which still holds a massive stake. For a smart friend over coffee, the advice would be to look past the ticker price and look at the physical infrastructure. Most people don't realize that Datavault is building what is essentially a private internet for high-security data. When you trade SoFi ETFs or check Fidelity mutual funds, you are interacting with a system that is increasingly reliant on real-time data verification. Datavault wants to be the toll booth on that highway. If they can capture even a fraction of the data traffic in the financial and healthcare sectors of the cities they are entering, the current share price will look like a historical anomaly. The storytelling of this stock has always been one of tension. On one side, you have the expectation that this is a typical high-risk penny stock with grand plans and little execution. On the other, the reality of their recent technical deployments and revenue growth suggests a company that is finally starting to deliver on a multi-year vision. The gap between these two is where the opportunity lies for the sophisticated investor who isn't afraid of a little volatility. Whether you are using Robinhood Crypto or Fidelity Wealth Management, the principle is the same. The market eventually rewards execution, even if it takes a while to notice. In the upcoming months, we have several catalysts to watch. The full deployment of the ADIO technology in the Fintech TV pilot season will be a major test of their media monetization strategy.
Additionally, we are looking for updates on the NYIAX acquisition and the distribution of warrants that were previously postponed. These events will either validate the management's aggressive guidance or provide more fuel for the bears who think the company is overextended. If you're managing your own Fidelity IRAs or using interactive brokers' fees to your advantage by trading smaller lots, staying nimble is key. The technological aspect of what they are doing with inaudible tones through ADIO is particularly fascinating. It allows a television broadcast to send data directly to a viewer's smartphone without the viewer needing to scan a QR code or click a link. It bridges the gap between traditional media and digital engagement in a way that hasn't been done effectively before. It's the kind of tech that could be adopted by major sports leagues or retail giants, which explains why they are targeting luxury retail collaborations for their